Am I retirement ready? Am I ready to retire? If I've been laid off or there's one coming in the future, am I ready? This will answer that question. So your income picture answers whether or not going back to work is something you have to do out of necessity, or just something you can choose to do if you find a new opportunity that might spark some excitement. It'll help answer whether your retirement journey can start now, or if it's something that's just still a little ways off in the future, right? Maybe you do have to work for a couple more years, and it's a have to, not a want to, right? So first thing you want to do to figure all this stuff out is you want to tally up all your expenses. And particularly at times of sudden change, like a layoff, or when you're evaluating some kind of a buyout offer, you need to have all of the facts. And it can be as simple as just getting out a sheet of paper, or if you want to get super nerdy like me, you can get out an Excel spreadsheet, right? And then just start tallying up your monthly expenses. You got mortgage or rent. You got homeowners or renters insurance. You've got utilities, maybe car expenses, payments like insurance, maybe fuel, gasoline, anything like that. Food, it's a big one, right? So understand at least the baseline amount that you're going to need to live off of. And, this can also be a great time to see if there's any extra expenses that you can cut out. Right? Subscriptions that you've maybe automated and forgot about, maybe a gym membership that you're no longer using because you felt like you were going to go in January and then February rolled around and you haven't been there since, or your gym got closed down during the coronavirus and maybe you're not comfortable going back. I don't know. This could offer short or long-term savings if you end up canceling some of those. So next, after you figure that out, start creating an inventory of your assets. All right, that savings, checking, all your retirement accounts, like your 401ks, 403bs, 457s, any other investment vehicles, IRAs, traditional or Roth, any of those additional assets, even real estate. Maybe you got some rental properties out there. Some of these, like your savings or checking, that's immediately accessible, right? Others, like your investments or real estate, those involve a little bit more work to access for immediate needs. Now, if you or a spouse or a dependent experience some type of job loss or other negative economic consequence because of COVID, under the CARES Act, it was the economic relief plan, you could withdraw up to $100,000 out of an IRA or a workplace retirement plan like a 401k or 403b during 2020 without the usual 10% penalty for those that are younger than 59 and a half. So that could be another source of income for immediate needs. You need to keep in mind, though, that any distributions still are taxable, and the income tax due on those distributions could be spread out over 3 years. And there also is an option to return some or all of the funds to an IRA or another retirement plan within those 3 years. So I would highly recommend talking to a tax advisor or any other advisor to understand all of the potential tax implications before you do any of that. All right. And so what you'll want to do now is compare those two totals, right? You've got your income coming in. You've got an inventory of all your assets. Now, will your income cover your expenses? If it won't, you have an income gap, right? And there's a number of ways that you can work to fill that gap, and we'll talk about a few of those here in a minute. But first, I want you to think about some of the things that you might miss from your job. And I'd venture to guess that one of the most important is that regular paycheck. Like clockwork. You can count on that money hitting your bank account, or the check landing in your mailbox every single 2 weeks, or for some, maybe once a month, maybe twice a month for others, whatever it is, but today you may have a severance payment or unemployment that could replicate that steady stream of income for a time, but those sources have an expiration date, so I want to help you think about how you can set yourself up for the long term. And you've likely got other potential income streams. I talked about Social Security just a little bit ago, but there's going to be others as well that you could tap depending on your situation. So what it takes to switch from counting on an employer's paycheck to paying yourself is a plan. And that's where we come in. It's like every day we prepare written retirement income plans to help people and families just like you that you've been working and saving all your lives, and now you're ready to pay yourself, right? You're ready to turn a collection of accounts into a comprehensive plan. And I want to touch on that for a second, because if you're like many of the people we work with, you likely have just that. You have a collection of accounts, those statements that you get every month or every quarter. And I like to think of it as a junk drawer. And I know I'm not the only one that has one of these. Ours is in the kitchen. It's actually just to the right of the coffee pot. Right. So I'm sure you could survive on a desert island with what's in that kitchen junk drawer. It's got tons of amazing stuff in it, but it's still one of the most infuriating things to dig through, because you're looking for one specific thing and it's always at the bottom. right? It's always at the bottom. So hopefully you can relate to that. But that's normally what we see. Different accounts, nothing's working together. And the key to being retirement ready, or just knowing that you don't have to return to the workforce unless you choose to, is taking that junk drawer and turning it into an organized control center, coordinating your assets together to create a regular stream of income that replaces those paychecks that you've been counting on every 2 weeks or every month for years and years and years. That's what we want to do. So what you once counted on your employer to provide is now up to you to provide. And a written retirement income plan smooths out that transition from an employer paycheck to your paycheck, you paying yourself. Otherwise, I feel like we're just leaving it up to chance. And so let's talk about a few sources after a layoff or buyout, and then we'll talk about some primary considerations of an income plan. And finally, there's a couple of really good moves that could potentially make your income plan even better. So income sources, among those potential income sources could be unemployment benefits, right? You may be eligible for unemployment benefits if you've been laid off. A lot of people don't realize that. So, and I mean, if you've been given an early retirement package or something like that, you still might be able to get unemployment benefits. And that could help replace some of your income for a while, anywhere from about 12 to 26 weeks. So that could be a short-term solution. And on average, unemployment benefits, I'd say they usually replace roughly about 40 to 45% of a person's weekly income. And so that's one area. Another, you may have been offered a severance or a buyout package. In some cases, you might have the choice of whether to take that buyout in lump sum or installment payments over time, kind of like, annuity payouts, Social Security payouts, pension payouts, something like that, right? And so consider that choice very carefully in light of your financial goals and the potential tax implications, because you may prefer to take that lump sum, pay the taxes, and roll the sum into a Roth, which grows tax-free. Or you just may want to roll it into a traditional IRA, and so unemployment benefits, severance benefits, buyout packages, all can help fill an income gap, but those sources usually do have an expiration or some type of an end date. And so then we have to talk about tapping into your retirement assets early. Generally your 401k has a 10% early withdrawal penalty in addition to the applicable income taxes if you make those withdrawals before 59 and a half. However, there are a couple of exceptions to that special circumstances. As I mentioned earlier, the CARES Act for the hardship for those affected with COVID, for those that were affected negatively, whether it's you or your spouse, you could withdraw up to $100,000 from your 401k or your IRA without that usual 10% penalty. So that's good. And we mentioned that on an earlier slide. Qualified plans like 401ks and 403bs also have a provision for those that have been laid off during or after the year they turn 55. And in those cases, the 10% early withdrawal penalty is also waived. So that's cool. We're always available to review those options with you. Guys, I would highly suggest you make any such decision in consultation with any qualified financial advisor along with a tax professional. That way, you know that you're making the most appropriate for your specific situation, and you understand the potential tax consequences and how such withdrawals could affect your future savings. So don't make any of those decisions just on your own. At least get a second set of eyeballs, maybe a third or fourth set of eyeballs. I just say, with everything that's going on in the world right now, it'd be way too easy just to sit at home, right? Just say, all right, I'm just not going to do anything. Let's just wait or hope for things to happen. But as I've always said, hope is not a strategy. Hope is not a strategy at all. Now's the time to plant your heels and maybe like this guy with the boxing gloves, maybe fight back. I love that. I happen to be a martial artist. I got a black belt in Taekwondo. So anytime I see anybody with boxing gloves on, it just kind of makes me a little excited, right? So what you guys can do right now is time for you to define your next chapter, your next adventure. You get to define your worth, not somebody else. And no matter what your immediate future holds, whether that's a new career, whether that's part-time work, the opportunity to embrace retirement today, just know we're here. We're here for you. There's no greater satisfaction, I think, than helping people like you all figure this out. Figure how do I determine that next step? How do I move forward with confidence? Now is not the time to be worrying or wondering when you can be in control. Now is the time to know that you can be in control.